Julia, your thoughts on the session today? A little bit lacklustre, at least at the index level.
In the end, we were flat down by just 1 point, but we did see some good volumes going through relative to the last couple of months, and just over $4 billion worth of stock being traded. Some of the defensive areas were being sold off, the staples, the telecom area, as well as the healthcare space, all finished in the red. But we did see a good session for the utility space as well as the consumer discretionary space. There were some stocks on the market reaching 52-week highs, so it is worthwhile celebrating their achievements today. Magellan Financial Group, all-time record high today. The stock's up a massive 274% in 2012.
Everyone keeps talking about Magellan. What's suddenly seen this rocket under their share price this year? It's been incredible.
We've seen a few of the fund managers doing well. Magellan Financial Group reaching an all-time high today, but BT also reaching a 52-week high, and of course in the last few weeks we've seen Perpetual reaching a 52-week high as well. So it does look like there has been a spotlight on these fund managers. I guess the view is that we are going to see wealth management bouncing back, and the Australian share market yesterday reached a 17-month high, so that bodes well for funds under management and attracting assets as well. So a great session for Magellan Financial Group reaching an all-time record high. It wasn't the only one. We also saw DLX reaching an all-time record high today. That stock's up by a more conservative 30% over 2012. But if we have a look at stocks reaching 52-week highs, we saw a diverse range of stocks. BT Investment Group, Clug, which is in the mining services area, the Reject Shop, which is in the retail area, and we also saw Caltex hitting a 52-week high. So while the market was quite flat and there wasn't a lot of action happening, in terms of individual stocks, there were some pretty big moves today.
Certainly, I had a few people watching it today, some big moves today. Look, is there more starting to be factored into this stock than simply short covering? Because we know the level of short positions on this register.
I think it's two things. One is the short covering, which is happening on a massive scale at the moment. In fact, today, if we have a look at volumes, they were 4 times what they were yesterday. So it does seem to be exponentially gaining ground. And that's the thing with shorts. Once the stock price moving upwards, then it starts to erode into the profitability of short positions. And so you see a lot of people trying to get there in time to short cover their positions. So volumes are extremely high in Fairfax because of the short covering. And secondly, we have seen investment houses becoming more positive on the media space. We've seen a big run up in 7 West Media. Fairfax today in one session gained a massive 11.3%. That's almost what the Australian market has gained throughout the whole year. So it's a huge move. We also saw APN Media up by 10.4%. And if we have a look at short positions in Fairfax, the last report to ASIC was on the 7th of December, and of course we get daily reports on short positions now, and 11.9% of the stock was still shorted on the 7th of December. Now that's not too different from at the beginning of the year. On the first trading day of January there was about 11.8% of Fairfax being shorted, but the fact is throughout the year we've actually seen these short positions building. In June we saw short positions at 13.7%, and in fact it looks like the peak was in mid-November where we saw short positions getting to a peak of 16.5% of Fairfax's stock. Since then, we've seen a decline in short positions. So what we've seen is short covering. And since mid-November, the 15th of November, what we have seen is Fairfax shares rising by a massive 36%. So if I bring up a chart of Fairfax, this is what it looks like over the last 30 days. 16.5% of stocks, short positions peaking at this point here. And you can see short covering has happened throughout this period, and short positions have now dropped to under 11.9%. So the stock has been going up because of short covering, up a massive 36% since mid-November. So that's been good. And then on the other hand, we've seen investment houses becoming a lot more positive on the stock as well. Today we saw CBA coming out with an overweight rating, so increasing its rating on the stock, and a target price of 59 cents. And of course UBS has a buy on the stock with a target price of 60 cents. Now this is a stock that was at around about 50 cents earlier during the trading day and closing up around the 54-cent mark.
Talk about the banks. Big day for the AGM. It's weird. NAB in Perth, Westpac in Sydney, Bank of Queensland in Brisbane. Look, a lot of talk about further rate cuts and maybe as well a bit of an improvement in the banking environment moving forward.
I guess today was bank day for the Australian share market. So many annual general meetings to absorb in, and it's actually been a fantastic year for the banks. 2012 we've seen ANZ, we've seen Westpac, CBA, all up over 20%. We've seen NAB up by about 5% trailing, and Bank of Queensland up by 1.4% also trailing. But for most of the big four banks, some very strong gains. Now, this hasn't really been underpinned by earnings. This has been about an investment theme that's continued all throughout 2012, and that is the search for high yields and defensive stocks. And this theme has really carried the banks. In fact, if we have a look at the earnings, they've struggled to grow at just the cash rate plus inflation. So if we have a look at cash earnings for ANZ, they were up by 6.4%, and ANZ was actually one of the better out of the big four. Commonwealth Bank was up by 4.7%. We saw Westpac up by 4%. NAB actually went backwards, and of course Bank of Queensland was the first major Australian bank to see a loss in around about 2 decades. So on the earnings side of the equation, the banks really struggled to grow at the cash rate plus inflation, but the share prices did extremely well. So we saw more than 20 plus moves for most of the big four banks. If we have a look at the environment, it's still a very difficult environment. If we have a look at total credit growth, the latest numbers, it was just a rise of 0.1%. Mortgage growth was just a rise of 0.3%. So we're still in this very low credit growth environment, which the banks are still going to have to battle with in 2013. So that's going to be a challenge for the banks. This year we've seen a fantastic year for the banks on the back of just that investment theme and investors searching for yield and defensives. Next year we're really going to have to start to see some earnings flow through, and we're watching those credit growth numbers very carefully to see signs of life in that area.